Hello traders, and welcome to the educational video titled The Alligator System. The Alligator System was developed by the author and trader Dr. Bill Williams. But let's go ahead and examine the anatomy of the alligator. As you can see, it consists of three lines, three moving average lines. The green line corresponds to the lips of the alligator, where the red line corresponds to the teeth of the alligator, and the blue line is the jaw of the alligator. We'll talk about them in detail as we move on. So the alligator lips, the green line, it's a smooth moving average of the median price. What is the median price? The median price simply is the high price plus the low price divided by 2, and is the average of the last 5 periods with an offset of 3 periods into the future. As you can see here on our chart, the green line, the lips of the alligator, extend to the right of the last candlestick, and this is the offset, and it gives you hints how the market is expected to behave in the future. Good. Now, the alligator teeth, the red line, again, is a smooth moving average of the median price of the last 8 periods with an offset of 5 periods into the future. Once again, the red line extends to the right of the last candlestick, and it extends 5 periods to the right. Excellent. And now the blue line, the alligator jaw, it's a smooth moving average of the median price. Now it's 13 periods with an offset of 8 periods into the future. Good. Now, why a smooth moving average and not a simple moving average? So the answer is very simple. As you can see on our price chart, the red line generates a lot of false signals because the prices fluctuate up and down the simple moving average, the red line, where the blue line avoids a lot of these false signals. It doesn't eliminate them, but it avoids a lot of them. Good. That's why Dr. Bill Williams chose the smooth moving average. Let's move on and see how we identify an uptrend using the alligator system. Very good. When the 3 moving average lines open up and prices are above them, then we can say that the market is moving upwards. Good. And when the prices are moving below the 3 moving average lines, that they are in parallel, then we can say that the market is moving downwards. And of course, when the 3 moving average lines, they are mixed up, they are intertwined, they look like a spaghetti, if you wish, then we are in a sideways market, and the alligator, we can assume that he is sleeping. And when he's sleeping, then it might wake up anytime, and that's too risky to be around. Good. So what I'm saying is stay out of the market when you identify a sideways market. Good. Another concept is the divergent bar. In this case, we're discussing the bullish divergent bar. It's identified in a downtrend, in a decline, and it records a lower low where it closes in the upper half of the bar. And we can assume that the bulls take over the market. Good. One special requirement is that the bullish divergent bar is located out of the alligator's mouth. Good. Now, the bearish divergent bar similarly is identified in a rally, in an uptrend. It records a higher high, but it closes at the lower half of the bar. We can assume that the bears are in control now, and the same requirement holds here. To qualify for a bearish divergent bar, the bearish divergent bar has to be identified out of the alligator's mouth. Excellent. Another indicator, another oscillator by Dr. Bill Williams is the awesome oscillator. It's very similar to the moving average convergence divergence, but with different parameters. The difference between the 5 simple moving average and the 34 simple moving average. The crossing of the 0 line, it generates a buy and sell signals, but another useful information here is that the green bars indicate positive momentum, where the red bars indicate negative momentum. And we need that when we start trading using the alligator. So here we are using the bearish divergent bar is outside of the alligator's mouth in an uptrend, The AO, the awesome oscillators bar corresponding to the bearish divergent bar is green, which is good. So we decide to sell right below the low price of the bearish divergent bar and place a protective stop loss right above the high price of the bearish divergent bar. Good. It's a counter trend trade. So we sell while being in an uptrend. Why? Because we believe that the uptrend has been exhausted. The risk is low. It's the difference between the sell and the stop loss. Now, the bullish divergent bar is identified in a decline. It has to have a red AO bar, and indeed it does that. And we decide to place a buy trade right above the high price of the bullish divergent bar and a protective stop loss right below the low price of the bar. It's a counter trend trade, and it's of course outside the mouth of the alligator. Now, another concept is the fractals. The up fractals in this case, it consists of 5 bars where the middle bar records a highest high among the 5 bars and is preceded by 2 lower highs and is followed similarly by 2 lower highs to the right. 4 variations here, they all qualify for up fractals. And let's talk about the down fractals as well, where the middle bar of the 5 records a lower low and is preceded by 2 higher highs to the left and 2 higher lows to the right. 4 variations once again. And let's move on and see the system in action. The red triangles that you see here on our candlesticks, it's we can use them, we can attach them through the MetaCodes platform, through the Bill Williams indicators. It's called Fractals. Just select Fractals and it will attach these small red triangles. The up triangle corresponds to up fractals, where the red triangle, the down red triangle corresponds to down fractals. You don't have to do anything, just attach it and that's it. So the first requirement is that the down fractal is in a downtrend, right here, right below the mouth, and more specifically, it can be hit below the red line, below the teeth. We can do that as well. And then we place a protective stop loss. And what about take profit? Take profit, we have 3 options here. The first option is a close above the lips, above the green line for the conservative traders. And we can also have another option, a close above the teeth, above the red line for the less conservative. And of course, we can close eventually when a buy trade appears on our price chart. Good. So 3 choices for take profit. Similarly, an up fractal strategy, we take a buy trade right above the red line, right above the teeth of the alligator with an up fractal, and then we have 3 choices for potential take profit. So the first choice is a close below the green line, below the lips for the conservative traders. Less conservative traders might choose a close below the teeth, below the red line, or a sell in the opposite direction. I hope you enjoyed it. Stay tuned for more.